Marc Faber, the famed contrarian, correctly predicted the economic downturn and the recovery. Now he's warning investors to be cautious about buying U.S. stocks at current levels and says it may be time to sell on good news. Marc Faber, editor and publisher of the Gloom, Boom, and Doom report, is with us this morning from Hong Kong. Marc, always a pleasure to speak with you. You have said you don't expect U.S. equities to end this year higher. I suspect, though, you probably agree that there's going to be more volatility. And if that's the case, what kind of low might we expect the S&P 500 to set during the year?
Well, basically, as you know, we bottomed out a year ago, March 6th, at 666 on the S&P. And then we made a high on January 19th at 1,150. And then in February, we corrected down to February 5th to 1,045. And now we're again above 1,100. I'm not so sure that we'll make new highs, but if we make a new high above 1,150, I don't think it will be that far above the 1,150 level, maybe 1,200, and that thereafter we have a bigger kind of correction on the downside.
How far might it go down if that correction comes to pass like you predict?
Well, I think if we make a new high, then I wouldn't rule out the correction of at least around 20%. And don't forget, many shares in America and globally have already corrected 20%. So for them to make a new high isn't going to be all that easy in the first place. So what we could see is a new high in the S&P and the Dow Jones that is not confirmed by the new high list. In other words, you will make a new high with fewer stocks making a new high than in January.
All right. Now, Marc, speaking of how far things can go down, I want to switch gears for a moment and talk about currencies. Do you think we've seen a bottom for the euro yet?
Well, the euro made a new high against the US dollar at 151 on November, I think, 25th, 2009. And it was a false breakout move on the US dollar coming out of a wedge. And then we had the big correction down to 134. In other words, the dollar strengthened considerably. Now the euro is very oversold, and the news has been horrible. Everything you've read has been a disaster for the Eurozone. And I think the euro now can rebound to around 140. Before it goes lower. I think there's nothing good about the US dollar, but I don't think there is much good about the euro either. And what you have in Europe is indirectly also monetization of the debt.
Marc, what's going to be the catalyst for investors to turn sour once again on the dollar?
Well, I think when investors realize that the fiscal deficits aren't going to come down, that they'll stay very high, when they also see that one state after another is essentially bust, like California and Illinois, and when they see that monetization will become inevitable in the long run, I think at that point the dollar will be weak. But don't forget, it may not necessarily have to be weak against the euro. Both currencies are sick, and so both could go down, and then ultimately you just have one or two sound currencies, notably precious metals, and I think the Asian currencies will then probably also appreciate against the euro and the US dollar, but notably precious metals will then be strong.
Marc, I've only got about 15 seconds left. If there's one asset class in the world to be in right now, what is it?
Well, right now, as of today, I would probably go long the euro, and I would probably be long US Treasury bonds, but only as a trade for the next, say, 5 to 10 days, and then we'll have to see further. In general, I would say it's better be in stocks than in bonds over the next few years, because we will get more inflation in due course.
Marc, thank you so much. That's Marc Faber, everybody, publisher of the Gloom, Boom, and Doom report, with a whole lot of investment advice there.